The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour, where there's no bull side, no bear side, just the right side. And of course, the right side is being bearish today. So that didn't make any sense at all. As always, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
Well, if you've been paying attention to the markets, or maybe you're listening to it later, we had kind of a little mini market event out here. Normally, we don't have these dramatic sell-offs midday anymore. They're either at the beginning or end of the day. Not uncommon to see the market ramp all the way to the close through the day, but very uncommon to see just middle of the day. Normally you get the gap down and that's it. There are some reasons why I was situated to take advantage of this downside. We'll talk about those. Of course, if you had my newsletter this morning, you would already know. Anyway, what else do you have going on out here? Well, you got a few buyouts that they lobbed in here midday to try to save this market. The timing I find rather suspicious, not the actual news. But if you're a big cheese on Wall Street, you pick up the phone and you go, you've got that big deal news coming out, and you're going to say something about it tomorrow, and you need to say something about it right now. Because the market was on fire, the roof was on fire. We can't let this thing burn. I was going to play that, but then I remembered it had kind of a naughty end to that song. 2149 on the S&P cash, but way before we had anything going on in this market. Another open with pretty much the lightest volume of the year. That has not happened. Volume did kind of increase. We were still about 500 million shares short of a breakout or volume to breakout. You might think of it as escape velocity for the market. So we were still, I think we came in actually a little better than I thought. I was thinking 3.6 billion. It came in at 3.8 billion yesterday. Right now we're at about 2.7 billion shares, which is about 700 million shares more than we were to the upside yesterday. I think we can say 2 billion to 2.7 billion, and we get the idea. The scale is easy. No higher math, no using all 10 toes and 10 fingers. But at 2150 on the S&P cash, we got down to 2145. We'll see how this plays out. Going into fund buying, but fund buying looks to me, at least from the trim tabs data, to be a neutral. And again, we might be having some other things in the equity that don't instantly make sense. But we'll bring those up also. Alternate theories, as I have been bringing up this week. There's lots of times when multiple things happen at the same time. Everybody thinks that they know what caused something. But if two things happen at the same time, who really knows how much weight to put on either one? Or if both had any effect whatsoever. Maybe there was a third thing out there that you didn't even look at. But, of course, the reason for the plow down today was Deutsche Bank and some of the bonds surrounding Deutsche Bank. There was an article out from somebody, which I never actually found, that said that 10 hedge funds were trying to get out of equity positions in Deutsche Bank because of issues. And, of course, the flood for these 10 hedge funds to get out made the CDOs, which were the same thing that blew up the housing market in 2007, come back to bite everybody on the posterior. Whether that story is true or not, I have no idea. We'll probably hear more about it. But CDOs are notoriously bad for being liquid in markets that are headed down. And kind of what blew up Lehman out there is that when you have a market for something that is illiquid, it's great why it moves up. The bombs seem, you tend to be holding a hand grenade with a pin out of it. All you have to do is let off for a second, and then in about 3 to 7 seconds, depending on whether you have a Korean-made hand grenade or one made later, it will blow up. So the question is 3 or 7 seconds. Seeing a little bit of that. Does this mean that this is the end of the push for the bears? I was waiting for one more signal. We were talking about the TLT. I thought we got it earlier this morning, but the plunge protection team filed into the bond market here to save it. We'll take a look at that in the show today. But we need to get to our histoire so we know what to do next time this happens.
That it's all just a little bit of history repeating.
It is history repeating on this day in 1987. If you thought you had bad investment timing, let this comfort you. Only 13 trading days before the crash of 1987, Charles Schwab launches its IPO, selling 8 million shares of stock to the public at an original price of $16.50 apiece. Just 20 days later, the crash of 1987 hits. The stock market plunges 23% in a single day. Schwab's stock is hammered down to $6.50 from $16.50 of the IPO price. And you would have had to hold on to it for a while to make it worth anything. And of course, everybody says it can't happen again. We were talking in the den. Everybody always says it's different this time. And guess what? I loved John Kenneth Galbraith's A Short History of Financial Euphoria. Everybody always says that it's different this time, and guess what? The financial market does not really work well with innovation. I think maybe the blockchain may be the first innovation in finance in 100 years, but the principles for how much money you have down, how much skin you have in the game, I don't think they've really ever changed. Maybe the technologies behind it, computers and banking to a small extent, but loan making and getting people to throw money into your bank, I don't think that's really changed forever. Everybody always says it does. Everybody says it's a new paradigm. Everybody says, you know what? You've got that big truck out there. You're delivering watermelons. And you know what? You're just breaking even. You know, if we got 2 or 3 or 4 trucks that size, we'd really make money. Yeah, the ideas of economies of scale generally are way overblown. On this day in 1987, you would have gone to sleep and had sweet dreams. A few weeks later, you would be feeling like most commodities traders, waking up wet and screaming. Anyway, what else do we have going on out here? Well, I have to say, I told you so, but a little differently. I guess I'll do this when we come back. But a little bit of Kelly's Heroes puts the spin on the OPEC deal from yesterday. We'll get back to this in a minute. Give me a call, 877-927-6648. Email me at path@tfnn.com. Put a message in the den.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
There's a couple of lines in Kelly's Heroes that I just love. Of course, the one I love the most is Mad Dog, who always says, enough with the negative waves, Moriarty, enough with the negative waves. But there's one other one that I love at almost the end of the, I'll call it the third act.
Make a deal.
What kind of a deal?
A deal. Maybe the guy's a Republican.
I always thought that was good. It's kind of like the sugar out there. It's part of the movie that isn't that big a deal, but it sets up the end of the deal. It's kind of like Roy Scheider in Jaws when he's making funny faces with his 5-year-old boy. It's one of those sweetest parts of the movie that the movie, to me, wouldn't have, you don't think about it at the time, but it's there. Anyway, Schmopec, OPEC, I don't believe anything. And, of course, we do find out today that the OPEC deal is really not a deal. It's more an agreement maybe to make a deal. Do not surprise if this melts quicker than ice cream on Georgia asphalt in mid-July. But we already knew that, didn't we? After the bell come Monday, we've got the Container Store Group, a recent IPO. Did a little bit better last time. When we get to Wednesday, we've got Yum Brands, so maybe a little bit of read on what's going on with their China deal. But again, not a lot of actual news to move the market. And that's, again, a market that can be easily susceptible to over the transom rogue waves as we saw today. Now, I was saying earlier that I had some stuff in my newsletter. Wanted to look at Amazon here. The real reason why is everybody knows I pay a lot of attention to short sellers in the market. But to me today, the most important thing was the amount of shorting going on in Amazon yesterday. This has not been a stock that traditionally has a lot of people piling in. But certainly yesterday we started seeing a lot of people piling in. Went a little higher out here today, but my guess is that when I get the numbers tonight, we're going to start seeing that many of the biggest people on Wall Street were going out here hunting elephants with Amazon and shorting it. That may be part of all the hoopla yesterday for it getting the $1,000 call from yet another gentleman on Wall Street. But I started seeing that, and I thought, okay, so Amazon's got a lot of shorters in it today. Maybe it's got a little bit more in it to go. But then I started looking at a lot of these other big stocks like Google, and I'll take a quick look at that one, and some others. And you know what I started seeing is that there's been some pretty big shorting of these high dollar stocks. Why is that important? Well, retail investors and probably the more short, fast money crowd will short stocks that are $30 or $20 or, you know, something like that, because your percentage move is quick in time, but doesn't tend to be huge overall when you put up your wins and losses. I like to short stocks that are over $30 and under or around $100, maybe $150. Above that, I like to use options. I like to use options when the VIX is at nothing, when they're charging almost nothing for the volatility that might come. Always, I think, a good bet when you can put your back to the wall on something like the VIX. But been seeing a lot of movement out here, a lot of discussion about Google, and kind of stray stock about Amazon taking and eating their lunch. Didn't see a whole lot out here today, but we have seen a rather consistent drumbeat of some of these bigger stocks actually finally getting some higher percentages in the short department, and that's kind of what we're looking at over the last couple of days, which makes me think that people that are shorting $800 and $900 stocks, also Priceline, I think that one, PCLN, was another one of those stocks at $1,500 that actually had started seeing a uptick lately in the short department. That had been kind of last week at these levels. It spiked it today. And this is not uncommon. If we start seeing Priceline move back down, I suspect that maybe today we're going to see, or maybe tonight I'll see it too, and that is yet when it got to 1481 today, that a lot of people pulled out the machine guns and started shorting Priceline too. Again, one of the reasons why big street names do not like shorting stocks that are $30 or $40 is because, of course, people like me and you, the unwashed masses, are in it. They like knowing that there aren't a lot of people short these stocks, that if someone is shorting a $1,500 stock, it's probably not some guy like me that the first time it goes up 2%, they're going to pull the trigger, cover their shorts, and make it even harder for me to hold mine. They may want professionals to play against professionals. They don't want, as many people are called in Las Vegas, donkeys, people that play wildly, unpredictably. If the thing started moving higher, then they could cover their shorts. But they don't want a bunch of clowns that will flinch at the first sign of trouble and run to the hills. And shorting very expensive stocks means that you don't have the ruffians, the unwashed, the hooligans. What else? What'd they call us? There was something else that came out of the 2000.com blow up in the emails. I'm trying to remember what they called us. Wasn't it Munchkin? No, it wasn't Munchkin. It was the Muppet thing. Yeah, that's what we were called, Muppets. We were called Muppets. Anyway, nice little spike out here in Priceline. Again, 2.85 billion shares, 2155. We're off 15 points. It's not the end of the world, but it going to a weekend to see a lot of people thinking that maybe funds would start nibbling for fund buying tomorrow. My guess is they see today, and they will continue to blink they're going to be much more willing to buy on Monday than they are going into a weekend as per Friday. So I'm not expecting any kind of bounce of significance. The first time that we would see a counter rally might be Monday, and it would probably be Monday later in the day. Now, of course, some of this news may actually be real, and then you'll see farther down. I dislike the horribly light volume as we push the highs one more time. I hated seeing the discrepancy between the market volume for the total market and the market volume for a lot of these leaders. The volume was pitiful in many of them. We talked about some of those yesterday. But again, we're going to blow out yesterday's volume to the upside significantly. I think we were doing about 2.4, 2.5 billion shares at the bottom of the hour yesterday. We're doing about 2.9 right now. So we're going to have the kind of volume that probably is going to get to the 4.2, 4.3 billion shares on the New York Consolidated Tape by the end of the day. And of course, bulls will never give up. They'll continue to buy, but we'll see just what they want to do as they get to the close today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
$21.58 on the S&P cash. Now, someone in the den asked me a question, and I wanted to get to it here at the bottom of the hour. And that is, we talked about what happened in 1987. Could it ever happen again? The answer is yes. It's since the recorded history of markets really started in its big time around the 1600s, but actually goes back to the time of Christ. But we do know that markets have pretty much done the same thing forever. That is that normally you have big downturns in the market caused by euphoria. That the people that were involved in that shy away. Eventually, they die off or get old, and there's a brand new generation that's never been through it that gets sucked in all over again to overpriced equities and bonds and gold and everything else. So there's nothing new that way under the sun. Could you have that kind of move again from 1987? The answer is absolutely yes. Especially the more that you monkey with markets, the more likely you are going to have some kind of massive instant correction that comes out of the blue. And that 1987 correction pretty much came, for the most part, out of a lot of the policies getting unwound from the previous 15 years. And they don't develop overnight. A lot of things have to happen. We may not know what those are right now, but all the research shows that the first time people blow up in the stock market or in trading, that when they come back, they're a little bit more educated. And by the third or fourth time, very educated to the fact that things get wildly overpriced over time. So, yeah, no new news out here. The only thing I can say is that it's going to be very tough to convince fund managers to buy tomorrow compared to buying on Monday. So I'm looking for at least the next day out here to have continuing pressure. We got to 2145, which is where we bounced before everybody started to buy. It's just we continue to see more and greater volume each time on these moves down. And each time, like yesterday, we higher. The volume is good, but it's not going to be like it is today. I can say that that we're already pushing 3 billion shares at the bottom of the hour of my show. Tells you already that we got some steam going on. And you know what? We also have some people that might be down there. I don't know for a fact, but we may have some hedge funds on the ropes. And that's generally when the market likes to never give anybody anything. If they're drowning, the market will throw you an anvil. And so we kind of have to watch out for that, although I cannot say that's going to happen. Apple down today. This thing's kind of blown off its little top out here. To me, the bigger issue, although someone says that some of their batteries are catching on fire, to me, the bigger issue today would be that Samsung has its new version of its phone that will be available for exchange on Saturday. So they'll be getting those little torches, pocket torches, out of the market. But less than about 20% of the people have actually exchanged their phones, which there's about 2 million of them. So most people are just kind of ignoring the fact that 40 of these phones have problems. They've installed the newer software that only lets the battery be charged to 60%. Just waiting for their new phones. So I don't know if this is just going to be a bump in the road of Samsung's giant phablet dominance, but certainly looks like it. I don't know how much to put the proof into Apple. I just suspect that Apple had some nice movements there when they didn't really know how fast Samsung would come back to the market. And a lot of fanning the flames of that by street professionals, but my guess is that they're more than willing to sell this bounce in the near future. Don't think Apple's going to hell in a handbasket. I just don't think that there's a lot out here to be had. 2158. So we're repairing a little bit of that damage earlier today. Also, we had NXPI come out at the kind of the depths of the market today. Strangely enough, you wonder why that always happens. A nice spike to $98. These folks make the NFC chips in Apple's iPhone. The rumored acquirer is Qualcomm. Nobody's denying it, so I'm assuming that there's some discussions out here. You know, is this a big deal? There's just the near field communications chips just have not really caught on yet. I don't know if they do anytime soon. Maybe this actually is a business that's going to be dropped out in favor of some of the what are some people thinking better technologies with the near field or the low power versions of Bluetooth. But if I was in XP right now, nobody really using these near field communication chips to really speak of. Just kind of nice that Apple is including it to continue their story of Apple Pay, which has never gone anywhere, by the way. I think I'd be a buyer, so not a big deal. Through its 94.49 May 31st high that had 29 million shares with 17 million shares so far. But again, going back into these gaps, which is where I've said that this is the place to probably start thinking about going after these stocks and shorting them. As a buyout candidate, I would take this off, but this is not a bad pattern out here to start thinking that maybe there's some low-hanging fruit. 21.59 on the S&P cash, as bulls will not be swayed. They will buy any pullback. They just will not buy any breakout. See what else we have in the inbox. Okay. A lot of short interest in Apple. I haven't looked at that lately. I don't think so. It's been pretty light. Let's take a look at it. Well, you got to 14% yesterday, 13%. It almost always, you don't know how many people went home short. But the last day that really had any short interest in Apple was the 15th. So we've kind of gone about 2 weeks since anybody's really felt like shorting this thing. So not enough out here to make me think that there's a short squeeze coming or near in Apple. If you're going to get a short squeeze, it would much more likely be something in, I think, some of these big cap, high dollar stocks. But even then, who's going to push? Because, again, most of the people that are short are not going to flinch by a 5 or 10% move in your stock. What else do we have gone out here? We'll take a look at a few others. Extreme Networks. Their price used to be extreme, not so much anymore. This thing is bouncing around its previous lows at 455. Just a lot of energy off this February 11th low. Can't short it, of course. It's a $4.50 stock. Can't buy it because it looks horrible. Be back after the break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focus Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we looked at Extreme Networks. Its extreme price now much more reasonable. FET, which is Forum Energy Technologies, been kind of watching this one out here more on a shorter time frame. I wanted to see how this one did today. It is breaking its June 8th high, $19.32, 1.5 million shares for 644,000 shares. And what else can you say about it? That's about it. But see what else we have out here on my list of stuff that I wanted to see how it worked out today. Scientific Games Company. This just looks like it's in a bigger trading range. 1.3 million shares on the July 26th high at 11.28. We got into that yesterday and today. Spiked it today, though, just with 252,000 shares. So a lot of these stocks look like maybe the runs are up. Even if we're in a trading range, that trading range extends a lot lower in some of these. Tenenco, TEN, we wanted to check back in on this one, the April 26th high, 1.9 million shares, $57.33. Got into it, spiked over with $1 on September 22nd. Did so with just 440,000 shares. No big deal. That the next day we went right back into the trading range on this. And again, these stocks just look like they're in some very big trading ranges. Maybe the next time lower, they break the mold. Winghouse. I was looking at a few of these that might be bullish plays if the market actually does get some legs on under it. I would need to see the market pull back on light volume. We are not doing that today. So maybe it's a few days down the road. I'm always looking for stocks that if I was wrong being short, or if I'm short, or if I'm long and I'm wrong on that side, I'm always looking at the counterfactual. Which stocks would I instantly move to if I knew I was wrong? Wingstop, not a bad looking chart out here. You had a nice sign of strength. You went to the highs. I would have liked to see a little bit more juice at the highs, but it's not bad. This thing has pulled back. We're into the NFL season. And I guess the only thing that would actually have me a little worried in Wingstop and Buffalo Wild Wings, we'll look at that one next, is that viewership's down about 10 or 15%. Some people say it's political. Some people say it's just because of the rules for concussions that are making the game not fun enough. Not enough distraction. And you might know. I had a boss that used to be I think I was about 20 years old. He used to be a NASCAR driver. And he said he got out of it because he was just tired of people going there to watch people die. And I thought, oh, yeah, maybe, maybe there's a little bit of that brutality in football. Of course, not a lot of people die, but you did get a lot of that. But Wingstop. Let's take a look at Buffalo Wild Wing, BWLD. That one certainly looks good. What I dislike in this sector, like I said, is that the viewership down on NFL, which is their biggest moneymaker, bigger than football or baseball by a large stretch, wasn't able to hold this gap that goes back, that had a sign of strength, blew right through it. That's telling me this is 135 on Buffalo Wild Wings. So maybe you get to 135 and the volume lightens up. It's not actually all that bad. But I dislike that gap did not act as support at all for it. Let's take a look at the SMHs here. Wise person in the den asked the question, is this the last hurrah for the SMHs with the buyout offer that came at midday out here? And it could be. What I can say is that I don't have a signal to pull the trigger just yet in the NASDAQ for being short. I would want something below the 9-day moving average, and we kind of bounced off that this morning. I would like to see a close underneath this to say some kind of confirmation out here. You got a lot of volume. Probably the worst thing that you could have seen out here in the semiconductors is everybody shorting this thing on the 9th. And that kind of pretty much set the low in the next couple of days. And again, if you follow my newsletter or what we've talked about, a lot of shorting in a downtrend tends to be an exhaustion move, and a lot of shorting at highs with light volume tends to be a high. So you kind of have to look at it in context, which is, was there a lot of volume and was there a lot of shorting? If there's most of the moves will make almost a day movement come right before it. If everybody's shorting, market's probably going up. If the market's going up on light volume, and then you see a high percentage of that light volume at highs being short, that's normally the smart money on the street saying that it thinks that it's over for the market, and a good indication that at least the street will have your back at least a little bit. And I've noticed a great deal of downgrades to happen right after light volume highs with high percentages of shorts. But on here you can see just that day where everybody pulled the ripcord on the shorts on the 9th, that a lot of times that was it. You got to have a slightly lower low the next day on the 12th, but that's about it. But no signal yet to pull on the SMHs or the NASDAQ out here. Certainly the market that is and does look the absolute weakest is the S&P. To me, the reason why is that it's much more susceptible to foreign trade, higher interest rates. The IWM, I have an email asking me about that too. What else do we have here? What was I talking about? I've lost my train of thought. SMH is... Oh, we were talking about the S&P. The IWM. My train derailed. Now here, we do have a signal that if it holds up, is what I look for in long-term tops. This would take you back in the IWM with a close below. Let's take a look at this with the displaced moving average. A close today would guarantee it on a 3x3 displaced moving average, and this would be the double repo pattern that you are looking for a long-term high in the IWM. It looks to me like we're going to get it. As long as it stays below pretty much the next 3 days above below 124. Let's see what we have out here. What is it? Where's my IWM? Got too many screens, too many windows. Okay, it's 123.50. So you went above it, you closed below it today. As long as you stay below 124, now this will continue moving down. but would signal a fairly significant downtrend. You did have a lot of down volume on the 9th as you did in the SMHs. Not as near as much shorting, though. When we come back, we still have time. You can email me at path@tfnn.com. I would love to hear your lovely voice. Call me at 877-927-6648. Post a message in the den.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we were talking about the TLT the last few days, thinking that this would be probably the most important chart to look at. Did get to 139.15, kind of did a reversal off the lows this morning, but this didn't make a higher high yet. So I am a little nervous about my call out here saying an ABC down. I will know that I'm wrong with a move above 139.15 as long as we continue to move down. A lot of movement out here in what people notoriously call the plunge protection team, but this may be a little bit more about some other things going on in Europe. So I'm going to give it a few more days, but certainly looked like today that the bottom had fallen out of the bonds and everybody else had rushed back in. I'm just wondering if that is not the dumb money trying to buy the bounce out here. If you were going to buy, you needed to be buying, as we talked about, at the 133 level, not trying to buy what looks like fairly tough resistance levels that you came into on these gap downs around the, what was it? You had a down day on the 7th, the 8th, and the 9th of September. And that's kind of what we're feeling now, but the volume was huge. Today, kind of a reverse out of those moves. So we were a little lower, but let's call it 6 million shares today so far. Not a big volume day yet, and these don't tend to turn on a dime. My guess is maybe we've got some government officials probably trying to slow this down a little bit. But I think that there's still probably an 80% chance that we are in a ABC down in the TLT. But I have to say that if you asked me that at 10 a.m., it probably would have been 95%. So we'll continue to watch the TLT as a big indicator on this market. Question about IBM. It had a bounce out here. I think that there's a bad tick in this thing. I never saw it go to 165 today. Another good indication of markets having issues at a top are these erroneous ticks. They seem to always come before problematic issues out here. You're coming back in. The volume has been kind of light off these lows. I discussed maybe buying this thing off the 154 low. I just didn't see a whole lot out here in the market that made me think that IBM was a buy again. I would really love to see it back down about that 143 level. The other thing is, of course, this is a big Buffett stock. And with Wells Fargo maybe being under pressure, we might see that somebody like Buffett would sell a position, winning position, since he was buying all the way down in IBM. He might be lightening up anytime soon in IBM to make way so that he can hold WFC longer. No guarantee of that, but I would worry about the Buffett issue on this. Appreciate all the emails today. If you can, remember to tell 2 friends.
And he tells 2 friends, and she tells 2 friends, and so on, and so on, and so on.
I hope make the Power Trading Hour a much more popular program by telling a few of your friends and a couple of your enemies. And in the meantime, get ready for the Tom O'Brien Show. And, of course, Andy today, he'll be talking about the deal or no deal with the Iranians and Saudis. And, of course, as always, sell when you can, not when you have to. And we'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.